So if the market is just one big game of supply and demand, and we have to understand and try to align ourselves with the big players who are ultimately moving these prices, then we have to understand where the demand is coming from. And the way you can do that is by understanding these aggressively impulsive candles, because these aggressively impulsive candles are essentially insights into where the controllers are stepping into the market. It doesn't necessarily mean that there's a huge amount of money, although it could. It just simply means buyers are much more in control than sellers, and sellers were not able to compete with buyers. And so if demand, buyers have control of the market, then price is moving up. And then you want to understand, where did they take control? So you can see right here, right? If you look at this entire area of price, what this really looks like is somewhat of a battle between supply and demand. When you see these ranges of price, it can be low volatility, and it can also be essentially a battle between supply and demand, and there's no one really over dominating the market. And that's a perfect opportunity for the big players to get their orders in. When you see these kind of battles taking place, there's no real clarity until one side of the market comes out on top, and then you get this type of run up. When you see this, it's very obvious that demand stepped into the market and outweighed supply, which is the most important thing. So buy side becomes stronger. Then I need to understand where it is. So if you look at where the breakout happens, where the momentum comes in, right? It's really this couple candle range. And then what you want to look for, what happens just before that? And so what I do is I'm just looking at this load up range just before. So where is there a little bit of a range? It can be 2 candles, it can be 4 candles, it can be 5 candles, it can be however many candles you want to use. Just whatever makes sense. Because whilst some people like to make their order blocks, just this tiny candle right here, some like to expand it here. There's no right or wrong. This is a load up of orders, and there's the execution of that load up of orders. And so refinements, meaning sometimes making it smaller, can help you, but they can also be hindrance. Meaning the larger it is, the more easier it is to see it, the more easier it is to get into a trade. But the more easier it is to lose a trade in that area, because price can come in there, stay in there multiple times before it gets the real move. And smaller ranges, if you try to pinpoint it to perfection like this, you might miss the move, because price may come into just this candle right here and then give me my entry model to confirm going short long, and then you've missed it. Or